All right, today we're jumping into a chapter from Rich Dad, Poor Dad that takes a story we all think we know, the story of Robin Hood, and just flips it completely on its head. It's all about what the author calls the secret of the wealthy, their unique relationship with taxes and corporations. So let's get into it and unpack the argument. So, right out of the gate, the author hits you with this. His rich dad saw Robin Hood not as a hero, but as a crook. I mean, that's designed to make you stop and think, right? It totally challenges that classic idea of take from the rich, give to the poor, and sets us up for a very, very different take on how money really works. And that really leads to the core question of the whole chapter. The book makes this bold claim that the Robin Hood ideal, taxing the rich to help everybody else, has actually backfired in a big way. So how could that possibly be true? Well, let's dig into the logic here. Okay, so to get this, we first need to look at what the book calls the Robin Hood myth, and then see how that stacks up against the actual history of income taxes. This is really the foundation for everything else we're going to talk about. The pitch was just brilliant, really. It was simple and super popular. You sell the idea of an income tax by telling people, hey, don't worry, this is only going to be for the rich. According to the book, that's exactly how the votes were won. It was basically a modern-day Robin Hood pitch. What's pretty wild is when you look at where these permanent taxes came from. I mean, they weren't always just a part of life. They started out as temporary things, just to fund wars. But the book points out that it took about 50 years in both England and the US to really sell the public on making it permanent. And the only way they did it was by promising it was only for the wealthy. But here's the twist in the story, according to the author. Once the government got a taste for all this new money, well, its appetite just grew and grew. And to feed that growing appetite, the taxes that were supposed to be just for the rich started trickling down and down until they hit the very people who voted for them in the first place. And this quote just perfectly captures the book's final take on it all. The argument is that the rich found ways to not get taxed in the same way because, well, they don't play by the same set of rules. So instead, the real weight of it all falls on the middle class, which of course begs the question, what game are the rich playing? And that brings us to what the book calls the Great Escape. It argues that when the rich were faced with these higher taxes, they didn't just roll over and pay, they completely changed how they played the game. So this is a really crucial point. Instead of just handing over a bigger slice of the pie, the wealthy used their smarts, their financial intelligence, to find legal ways around it. They hired the best accountants, the best lawyers, and found loopholes. And the number one tool they used in this escape plan? The corporation. Now, that word corporation can sound pretty intimidating, right? You picture a huge skyscraper or something. But Rich Dad has a much simpler definition. He says it's not even a real thing. It's just a file folder full of legal papers. That's it. It's a legal structure, a kind of shield created to protect wealth. And using the shield comes with some massive advantages. For one, the corporate tax rate is often way lower than the highest individual rates. But here's the real kicker. According to the book, it's all about when you pay tax. An employee earns money, gets taxed, and then spends what's left. A corporation, on the other hand, earns money, spends money on all its expenses, and then gets taxed on whatever is left over. That simple flip in the order is presented as a total game changer. This massive difference in understanding money is really the whole point of the book, and it's all wrapped up in this story of the two dads and their totally opposite views on everything financial. So on one side, you have the poor dad. He's a highly educated guy, works for the government, and his whole philosophy is about job security and climbing that corporate ladder. Then you've got Rich Dad, the capitalist. He sees things totally differently. His mindset is play the game smarter, and hey, instead of just climbing the ladder, why not just own the whole thing? And this idea really boils down to one thing: power. If you work for a paycheck, your employer holds the power. But if you can figure out how to make your money work for you, then suddenly you're the one in control. You're holding the power. That's the huge lesson Rich Dad was trying to get across. So great, that's the philosophy. But how do you actually use this information? The book lays out what it calls a practical path to escape the rat race. It's presented as a clear 4-step process. And notice, step 1 is still having a job. The book isn't saying to just quit. But the whole purpose of that job changes. You're not just earning to spend, you're earning to invest. The goal is to buy assets, things that generate income. protect them inside a corporation, and then eventually have the cash flow from those assets pay for your entire lifestyle. Now, to actually pull this off, the book says you need something it calls financial IQ. This isn't about being book smart. It's a very specific kind of intelligence built on 4 key pillars. You need to know accounting, how to read the numbers. You need to know investing, how to make money make more money. You need to understand markets, supply and demand. And finally, you gotta understand the law, so you can take advantage of all the tax benefits and corporate protections. And that is the ultimate payoff that the book presents. When you combine all these skills, you get to move at a completely different speed. It's the difference, as the author says, between walking towards your goal and flying there. You can build wealth so much faster than someone just working a traditional job. This all brings us right back to the core message of the chapter, and it's perfectly summed up in one final comparison between the 2 dads. So the poor dad, the highly educated one, gave the advice that so many of us hear our whole lives. Go to school, get a good, safe job, and work your way up. It's the standard playbook. But Rich Dad looked at that playbook and saw a major flaw in the logic. He didn't see the ladder as something to be climbed. And that's the question he leaves us with. It's such a simple but powerful shift in perspective. Instead of just being a part of the structure, why not be the one who owns it? It's a thought that really challenges the foundation of almost all traditional career advice, and it just perfectly wraps up the entire lesson of this chapter.